Are you concerned about the crypto crash? This is not the case with Goldman Sachs. In today's Money Morning, the path to becoming an institutional asset class, cryptocurrencies remain a fringe investment, despite the media attention. Remember this when examining the pricing of cryptos, and more. I don't need to inform you that the cryptocurrency market has had a terrible week. With this volatile market suffering a severe sell-off as fears spread across the media. What motivates it? Whether it's Elon Musk's reversal on crypto viability, or yet another alleged Chinese crackdown on crypto trading and miners, or even skepticism over whether the much-discussed institutional money is actually flowing into the market. To be honest, it could be anything. Because, let's face it, it doesn't take much to move the cryptocurrency markets. They are considered extremely volatile for a reason. And we've seen plenty of instances in the past of big gains followed by dramatic declines. With late 2017 eerily resembling the boom and crash of 2021. Which prompts the obvious question, should you be concerned? As Lachlan indicated in yesterday's piece, the simple answer is no. Cryptocurrency is not going away so simply, and it would be naive to believe otherwise. Indeed, as the catastrophe unfolded, the institutional money people were buying, not selling. Exchanges with a strong institutional presence, such as LMAX Digital, saw record trading volumes. Peaking at $6.6 billion on 19 May, the same day that the price of Bitcoin, BTC, plummeted to $32,974 before quickly rising to $40,231 within hours. Perhaps most significantly, a leaked Goldman Sachs research indicates that interest in cryptos is just increasing. The path to institutionalization. To begin, let me state that I find it difficult to imagine that this paper was leaked by anyone other than Goldman. Its timing and content are simply too convenient. Even more so when the article is titled, "Crypto, a New Asset Class." For anyone who has even a passing understanding of how Bitcoin and other cryptocurrencies work, this is a foreseeable conclusion. Goldman's prerogative, though, is institutional money. Unconcerned about retail investors' riffraff. Thus, the fact that they are really debating whether crypto is suitable for these ultra-affluent investors is critical. Particularly given that the debate contained inside this report was issued on May 21st. Exactly as the cryptocurrency market had confirmed its recent decline. As I already stated, the timing is a little too convenient in my opinion. Not that I'm advocating for outright market manipulation. Although that is entirely plausible, given the crypto market's relative infancy and lack of regulation. However, the report's more fascinating conclusion is how favorable it is to Ethereum, providing a plethora of reasons why the second largest cryptocurrency could take Bitcoin's dominance. As Mike Novogratz noted in the report's interview with him, because the three most significant advances in the crypto ecosystem, payments, DeFi, and NFTs, are being developed mostly on Ethereum, it will be priced as a network. The more people that utilize it and the more things that are constructed on it, the higher the price will eventually rise. Suggestions that institutional money may be channeled into Ethereum, ETH, rather than Bitcoin. However, Goldman's report does not completely rule out Bitcoin, noting that it is rapidly establishing a profitable, albeit volatile, store of value. Something that is becoming increasingly critical as fiscal and monetary policies abuses expand. Something that our own Ryan Dintz and Greg Canavan discussed in detail recently. Because the true takeaway for you, dear viewer, as an ordinary investor, is that crypto is still in its infancy. Regardless of what recent market movements may indicate. Despite the media attention, this is a marginal investment. As you can see, despite everything you may see or hear in the media, including from us, crypto is still in its infancy. It is a market that has existed for slightly more than a decade. While the market has grown significantly throughout that time period, it has not yet matured to the point where I would classify it as mature. Indeed, we have witnessed numerous instances of Bitcoin experiencing a severe price drop. A spark for doubters and detractors to declare, "I warned you so." In actuality, it would be more troubling if these types of pullbacks and corrections did not occur. Growth that is unchecked, in any asset type, is cause for alarm. A red flag that something fishy is going on behind the scenes. Because, in all honesty, the price of Bitcoin is a proxy for blockchain trust in many respects. An indication of investors' confidence in the decentralized system's ability to function well. Which, thus far, has deflected every criticism leveled at it. And each time it does, it converts a few new individuals who finally get it. Even Greg, our editorial director, is a relatively recent convert to cryptocurrency. However, he is more interested in blockchain technology than in any one cryptocurrency. However, that is besides the issue. The reality is that he is still a latecomer. Just like everybody else who is new to crypto assets. Because crypto was still a small market prior to the recent meltdown. As emphasized in the Goldman report. To begin, cryptocurrencies are modest in terms of market capitalization and liquidity. The market capitalization of global financial assets, stocks and bonds, is approximately $200 trillion. The above-ground market capitalization of gold is close to $11 trillion, while Bitcoin's market capitalization is only $700 billion. And, with a plethora of other, lesser cryptocurrencies currently in existence and many more on the horizon, selecting the winning coin is important. Indeed, when it comes to genuine Bitcoin investment, first figures indicate that participation is modest. According to our best calculations, there are approximately 100 million Bitcoin owners worldwide. That is insignificant. In the United States alone, slightly more than half of the population owns some form of stock, which is approximately 164 million people. A group greater than the world total of cryptocurrency investors. And, though the total cryptocurrency market capitalization may be $1.75 trillion, it is still quite little. Particularly when you consider that Bitcoin accounts for 42% of it. A single coin serves as a blueprint for a much more intricate and exciting future, where much smaller projects are experimenting with concepts such as smart contracts, decentralized finance, DeFi, and non-fungible tokens. Projects that have the potential to one day outperform Bitcoin and serve as the foundation for totally new industries. Each of which might pique the interest of a sizable number of institutional investors. Therefore, bear this in mind when examining the price of cryptos. Because, despite appearances, we are still in the early stages of this revolution's adoption. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.